Good morning, everyone. Thanks for joining us this morning. This is Matt Tour with Insurance Agency Marketing. I'm on the annuity marketing team here at IMES. I've been here for many years, so know a lot about the annuity side of the business. We're glad that we can be joined here later this morning by Craig Geiger, the Regional Sales Director with Lincoln Financial Group. So good to have Craig on with us this morning. He'll be joining us here shortly, and we're going to be discussing some really good selling opportunities we have with Lincoln right now. I know they just recently increased a couple of their cap rates and participation rates, so they're looking really strong on accumulation at this point. So Craig's going to be going over some of those details with us. So we're glad to be joined by Craig here shortly. And then here at IMES, I know we had a big webinar yesterday we did on the new DOL information. I know that we have some new legislation that was just put in place yesterday for qualified investments. So we have a form we've put together to utilize for that. So if you do have interest in getting one of those forms, when I make my phone calls after this meeting, I'll go ahead and get that over to you on the DOL side. But continue to offer our new producer builder program. Great way for you to earn additional incentives based on production in the first 180 days of being licensed. Great way to build up some more marketing campaigns. We've got different things you can choose from between seminars, videos, appointment setting, cash, iPads, a lot of different levels you can qualify for, and some great campaigns you can utilize based on your production with IMES here in the first 90 days. We also have our referred producer program going. You can earn monies based on referrals. You get an override based on their business. You get a cash bonus up front when they get contracted. A great way for you to build up a nice little referral bank account. We also have our marketing reimbursement. We reimburse $100 for every $100,000 of annuity, indexed annuity premium you write, and great way for you to have us help you with your advertising costs. I know that the advertising is not getting any cheaper, and we see a lot of money being spent now with virtual appointments, doing virtual seminars, doing mailings, creating activity that way, and doing social media advertising. We can help you out with all of that, and those come at a cost, so we can help you out with those costs based on your marketing reimbursement. So a great way for us to help you out on that end. We have a great back office support team. We help you out from start to finish when you're writing business. We can help you put the cases together to start with, get you out quotes, supplies, whatever you may need to get going, help you out with all that. We've got a great sales staff here. It can help you out with life insurance, annuity, Medicare, whatever you're working on. We can help you out on most ends of the business. We've got a great paperless contracting system. You get licensed with a number of companies at one time, and it really helps on the paperwork. You can do that online. And we also have a great new business team. They help you out when the business is submitted. They'll review the application, make sure everything's filled out. And with apps being 30, 40, 50 pages in length now, there's always a couple things that are missing. So make sure that you have everything completed on your end before we submit it. And then we go ahead and get that submitted. We also have an e-app system now. We use a Firelight, a great way for you to do business virtually online. And that way you can submit business. And typically when it comes in, it's complete because the software does not allow you to submit it until it is completed. And then the client has to sign off on it with electric signature. And then we go on from there. So really a nice combination there. So Firelight, I know we have a majority of our companies utilize Firelight, including Lincoln Financial Group. I know we probably see about 25% of our apps now being submitted via the e-app system, and that number is growing drastically. And as agents continue to utilize it, they use it more and more often because they get used to it, and it's way easier than having to hand write everything out. And it self-fills out a lot of it, so when you put someone's name in, it's going to put their name in whatever it's needed, address, phone number, zip codes, social security numbers, everything's put in. So really makes it easier for you when you're submitting business on that side. We have a great creative team. They help you with designing different advertising pieces, including websites. They can do business cards. You can change up your look for your company logo design. They can help you out with social media advertising, doing email blasts, whatever you may need on your end to expand your business. They can help you out with a majority of that, and a great way for us to help you out with those expanded sides of the business. They can help develop a website for you if you don't have a website. They can give you suggestions on what you should improve based on your current situation. We do a marketing analysis. That's something you have interest in doing. We can kind of go over what you're doing currently, give you some ideas on what you should look at going down the road, and help maximize your investment based on the advertising side. We have a website we have with IMES. It's www.imesinc.com. Really good website to go to. You can do different quoting deals on the website. You can do life insurance quotes, lifetime income, annuity quotes you can do on there. You can look at returns based on different index strategies. We got a lot of different industry links. Maybe look up an AM Best report on a specific company. We got all the a lot of the forums online. You can get supplies on different carriers. We also have current annuity news. We got that our latest annuity news online. Different sales ideas. There's a marketing corner you can go to for agents. A lot of great details you can take advantage of on our website. We also have the Retirement Analyzer. It's a software program you can utilize with clients. A great way for you to develop a game plan for a client, figure out kind of where they stand now for retirement, where they want to be 5 years, 10 years, 15 years out. Gives you a great printout, very colorful, a lot of graphs, a lot of valuable information. You can plug in, different items of interest, maybe, a premature death on a family member, nursing home stays, tough economic times. You can plug in a lot of good variables in there which would give you a really good overview of what they need to be do moving forward. And then, being an insurance agent, I'm sure you can fulfill a lot of those needs based on this software, what it kicks out information. We've recently, in the last couple of years, came up with a wealth management side of the business. I know that we have a great team on that side. I'm gonna go ahead and launch a quick poll. If you'd like to get some more information on the wealth management side of the business, I know that we can help you out with getting your Series 65 passed. They've got a lot of different investment platforms they utilize on that side. I know a vast majority of our top 20 agents are securities licensed. They do business on both sides, the insurance side and the security side. And it's a great way to really expand your business and take, full care of your clients. You hate to refer a client down the road to another individual. That individual, helps the client out, and you end up losing the client in the long run because you weren't able to provide the services the other individual was. So, it's best to keep everything on board. And I think, having a securities license definitely helps with that. I know our Series 65 is what we mainly work with on our end. So if that's something you have some interest in, check off yes. I'd be glad to get your name onto the wealth management team. I know Charles Jr., Mike, Zach. I got a great group of guys over there. Then we got some great, administrative people on that side that can help you out with everything you need on the administration side. Really a good group of people we've put together on that wealth management side. We've seen that business really grow in the last couple of years. I know they've hit some really big numbers recently based on the, how the market's been doing, along with the amount of money that have come into that side. So it's definitely a good force moving forward. So keep that in mind. If you do have interest, mark off yes. Otherwise, I'll mark off no. I'll leave this open for about another 10 seconds or so, and then we'll go ahead and move forward. But I think it's definitely a good arrow you can utilize for the clients on the wealth management side, and a good way to help out clients on all sides of the market and really be able to maximize what you could do for them. We just announced our latest trip. It's going to be a Mediterranean cruise, cruising up and down the Italian coastline in the Mediterranean. And we have stops in Greece and some other locations there. So Croatia, I know it's going to be a fantastic trip. It's a 19-month qualification. It gets started 12/1 of 2020. It runs through the June of 2022. So you get a full 19 months to qualify, 4.5 million credits. All of your business counts towards it. Should be a fantastic trip we're going to be holding abroad, and a great way to get to meet some other top producers. We got some great information that we'll be discussing, at the trip. We got some great speakers that will be involved. A lot of good information on that. And if you would like to get some additional information on that trip, kind of what qualifies based on your production, I'll be glad to get our flyer out to you. You can just check off yes on this latest poll I just sent you, and I'll go ahead and get you out the flyer. It discusses how you get credits, what annuities count towards the trip, what life insurance, Medicare, all sides of the business count towards the trip. It's a great way for us to get you on board. I know we've got agents that qualify for this every time. We got a nice block of guys that always make these trips. We'd love to have as many new individuals as possible. It's kind of open end on the number of rooms we can get. So if we have, 60 qualifiers, that's great. We'd love to have 80 qualifiers. That'd be awesome. But yeah, 4.5 million credits. It's a 19-month contest. I know we expect to have a good group of agents on board for this one. So I'll be glad to get some information over to you on that. And I'll leave this pull up for another 20 seconds or so. But I know we had to cancel our last trip this last year based on the pandemic. So we're hoping in 2020-22, everything will be wide open. We'll be able to have a great cruise and not have to wear masks and everything else that's involved with today's society. So hopefully things will change drastically in the next 18 months. I'm going to go ahead and close that up there and go ahead and move forward with the presentation. I know we also have presence on Facebook and LinkedIn, and if you would like to follow us on those social media sites, I'd be glad to have you on board as one of our followers. And I know we'd send out updates through these sites at least weekly, if not a couple, 3 times a week. So it's some good information that we release based on LinkedIn and Facebook. So if that's something you have some interest in joining on board, definitely get that done. I'd be glad to have you on board on that side of it. I know we've got Craig joining us, Craig Geiger. So we're glad to have Craig on this morning as our guest panelist. I'm going to move the presentation over to Craig now. He's a regional sales director with Lincoln Financial Group. Craig does a great job with marketing ideas, a lot of good expertise on the annuity side, and he'll be going over some really good information this morning on how to expand your business going into 2021 and, keep things moving here through the year with a great, game plan, good playbook he'll be going through and some great information. So good morning, Craig.
Good morning, Matt. How you doing?
Doing great. Got you on board, got your screen up, and I can hear you loud and clear, so you're good to go.
Perfect. So everybody can see my screen. Perfect. Well, hey, first of all, thanks, Matt, for allowing Lincoln to come on board and kind of be able to present with you guys today and just share some different ideas. Lincoln really wants to be a thought leader, especially in 2021 and beyond, because we recognize that the world is changing. And at Lincoln, we're always trying to create more content and more educational type content that you can share with clients right now, whether that's going to be in person or whether that's going to be virtual. So the presentation we're going to go over today is a presentation we actually built last year during COVID, because we recognize that as an advisor, you're going to be looking for more ways to, connect with clients on various ideas and topics. So if you look here in the bottom right corner of the presentation, you'll notice that you can actually use this with your clients. I know it's kind of a shocker because usually in our industry, all the good stuff's for producer use only. Very rarely do you have consumer-facing stuff that has a lot of good content. But we really did build this presentation around the idea that when we look at the fixed income marketplace, we feel this is going to be a big, big market for the annuity world going forward because there's just so many dynamics that are going on in the fixed income world like never before. And if you think about why that's relevant today, think about a couple things. How are interest rates going forward going to affect your clients' fixed income investment options, whether that's bonds, whether that's CDs, or that's even traditional fixed annuities. The reality is rates are low. They're probably going to be low for a while. But when we look at the actual treasury market, we look at bonds, most likely when we look at all the analysts, most analysts say that interest rates are probably going to be on the rise in quite a few different ways. And the projected yields on bonds over the next 10 years is going to be somewhere between 2 to 3%. So the reality is that typical place where they put a portion of their money in fixed income to be the defensive part of their portfolio, the yields are potentially going to be almost 50% less than what they're used to seeing. So the reality is it's definitely going to change the dynamics of portfolio building when it comes to what part of your fixed income is going to go to in terms of what investments. Because the typical places you would go, the yields just aren't going to be there like they used to. The other thing is, how's COVID-19, I should say, make your clients relook at their portfolios? Do they recognize maybe they're a little equity heavy and they want to start safeguarding assets and still have the opportunity to grow their money, but still have some protection maybe in place? Or do they really want to look at that fixed income side of it? Do they really want to look at different ways in which they can get more opportunity for more growth, more yield than the traditional safe investments that are currently available? Because if you think about the current state of retirees today, there's about 42 million retirees today. And believe it or not, within just 4 years, by 2025, there's going to be 65 million retirees. So we feel there's going to be a lot of money in motion. There's going to be a lot of people re-looking at their portfolios. And index annuities, I think, are going to have a great place there to help safeguard some of those assets, still give them growth opportunities, give them downside protection, and all in one wrapper. If you think about it, you think about clients that are either retired now or they're people that are going to be retired over the next, let's say, 3 to 4 years. There's going to be a big swing because a lot of these people realize they have less days ahead than they do behind to make up losses. When a client takes a 25% loss in the market, they need 33% just to get themselves back to even. They take a 30% loss in the market, they're going to need to make 43% just to get back to even. So the reality is people, as they're getting older or getting close to retirement or in retirement, recognize that they don't have that time to make up those losses like they used to. So the reality is when we think about, where we are in the market, it's all about action. And when we look back at 2020, I think we actually look back at 2020 now and realize it's that year of uncertainty because we had COVID, we had interest rates at 5,000-year lows, we had all the other things going on in our country. And we think as we look at 2021, this is the year of action. This is where people are going to want to start doing things again and re-looking at their portfolios. And I think because there's a little less uncertainty versus what was going on last year, we feel there's going to be a lot of money to move, a lot of money in motion. People are more willing to get together and do things now. So we feel, when you think about the fixed income marketplace, it's going to be a great market to look at for your business. And when you think about why, why is now such an important time to have these discussions with clients? Well, I think it's a couple things. When you think about today's fixed income proposition, it's more elevated now than it ever has been before because you have potentially rising interest rates. And then of course, with all the stimulus being written, and of course there might be more to come, there's going to be potential rising inflation. All of this equals more issues and risks than we've ever seen before. And when you think about the 10-year Treasury, most analysts say it's probably going to be around 1.5% to 2% by the end of the year. And that could potentially be a trend. We don't know, but the reality is that could very well be a trend, and it's certainly going to change the fixed income market as we know it. Now, of course, we also have to understand we have to create a way to explain this to clients in terms of the relationship between interest rates and bond values. We actually have a nice chart that you can walk clients through to help them better understand because most studies have shown that most investors, most clients don't understand the relationship between interest rates and bond values. Of course, we know how those work, but typically a lot of investors don't. So having a nice, easy way to walk them through that is obviously vital. And of course, why Lincoln? Obviously we're a thought leader. We're definitely a company that's very well positioned to help you, especially on the accumulation front. We've had quite a few rate increases over the last couple of months now. We've really kind of come back in a big way. And we have quite a few differentiators on our index products that I think we think are great opportunities to be a great accumulation type product for your clients with, strong and simple index strategies, as well as competitive pricing, and of course, a strong renewal rate history as well, because we recognize that it's not just about having a competitive first year rate, but it's about having competitive renewal rates as well. And Lincoln's very much committed to that. So when we think about kind of, how we look at this and how can clients grow their savings, obviously in this marketplace, it's all about people in terms of what they're looking to do. Again, when we look at 2020, everybody wanted to wait and see and not really act. But 2021 is the year that we need to address issues that are today that are concerns for clients for tomorrow. And when we think about that, it's never been more important to get back in front of clients, start educating them on the importance of reallocating their portfolio, relooking at their portfolio, and what's going to be a good fit for them going forward. When we think about the impact of bond prices and interest rates, it's really, if you think about it, there actually is trouble on the horizon. If you think about it, over half of the $5 trillion currently sitting in the U.S. corporate bond index, believe it or not, is currently BBB rated. That's one downgrade away from being junk status. So the reality is that could be a significant issue in the fixed income marketplace. Over the last 10, 15 years, when we've been talking about index annuities, we've always been talking about when it comes to bonds, hey, you got interest rate risk and you got principal risk. But now you're going to have to add on a third risk, which is now credit risk. So now you have three major risks on what's supposed to be a safe part of your portfolio or the defensive part of your portfolio. And that could be a real issue. At the same time, if we look at the 10-year Treasury just 10 years ago, it was around 4%. Before COVID hit, it was around 2%. And as we know, during COVID, it went below 1%. And now I think the last time I checked, it's around 1.2 to 1.3%. So the reality is, obviously, when we look at the risk versus reward spectrum on bonds, the value proposition isn't as great as it used to be. And again, what most analysts are saying is when you look at yields going forward over the next 10 years, it might be somewhere between 2 to 3% at best. So the reality is, the question you'd be asking is the risk worth the reward that I'm going to get? And I think with an index annuity, it can be a great piece of that fixed income part of your portfolio going forward. Now, at the end of the day, though, we recognize it's all about helping clients understand how those dynamics actually work. So what I would always tell a client is, listen, if you look at this, and let's just make it real simple. Let's say you have a $1,000 bond with a 10-year maturity here on this chart. If interest rates go down, as you can see here, you would have an increase in value on your bond. But Mr. and Mrs. Client, if interest rates, in fact, do go the other way and they increase, let's say by 1% or 100 basis points, it'll have the complete opposite effect on those bonds, or a 9% reduction in value. It goes by 200 basis points, it can have a 17% reduction in the value of your bond. So the reality is there's actually risk here on, again, what's supposed to be a safe part of your overall portfolio. And the reality is it's all about looking at alternatives in ways in which giving that client the opportunity to get more growth potential, but taking away some of the risks that they have associated with bonds, like principal risk as well as interest rate risk going forward. And again, when you think about where an index annuity can work, just think about a typical 60-40 portfolio. I mean, that's kind of been the gold standard for the last 30, 40 years, and it's performed well. But if we look at the reality in terms of where interest rates could potentially be going, this is kind of where an index annuity can maybe fit as an alternative, as at least for a portion of that fixed income part of your portfolio. So instead of doing a 60-40, maybe we look at doing a 60% equities, 20% in an index annuity, and 20% in bonds. So a 60-20-20. That way we can help increase alpha and reduce beta for the client. Now, it's all about, obviously, one, adding that power protection, knowing, hey, the worst you can do is zero. At the same time, we can give you growth potential in this index annuity. And by the way, every year is a fresh start. So you don't need to make up for lost ground if the market has a negative return. Now, where does Lincoln kind of come into this in terms of where we are competitive as a growth engine on our index annuities? So the first one I want to talk about real quickly is where we have a lot of traction right now at Lincoln, and that's on our 1-year S&P 500 daily risk control spread. Now, I know that's a mouthful. What that really means is it's a 1-year strategy that's uncapped with a spread. And as of Monday, that spread is now down to 1%. So 1% spread, which means the client pays a 1% spread, they get the difference. What's really unique about this index, though, as an accumulation part of your portfolio, let me go over here real quick, is the fact that when you think about this, what makes this any more unique than anything else out there in the marketplace? Well, the one thing we know about a lot of uncapped strategies or volatility control indexes is that almost all the time, they almost always include bonds, right? So a portion of that money is always sitting in bonds, less money is moving on to the equity side. What's nice about this particular index is, as you can see here under highlights of this index, it does not include bonds, and it includes dividends in the calculation, which is very, very important because it certainly gives you the opportunity to get more growth potential. Now, at the same time, we also recognize it's all about having value as well. And the other strategy that we have at Lincoln that's very, very unique is our Fidelity AIM Dividend Index. It's all about creating and giving that client value as well as diversification. And the way this is going to work for you here is it gives you the ability to know, hey, Fidelity is going to pick about 125 blue chip dividend paying stocks, and they're going to actively manage that. If we also know when we look at the last 30 years, over 50% of the return of the S&P 500 is dividends. So having dividend focused stocks in an index gives you just another diversification tool within this index annuity to give you a portion of that money that can be in a value-based index like this. Now, what makes this very, very unique to Lincoln, though, this is a proprietary index that we have with Fidelity that you can only get on this product. But at the same time, it's just a simple one-year par. And currently, it's a 65% par on a $100,000 premium on OptiBlend 10. Now, at the same time, it's all about creating transparency, right? Because you always want to know, well, what are those 125 stocks? The nice thing is at Lincoln, we actually publish this report for you. So we can actually show you what stocks are actually in this that's actually in this index, what percentage weight they actually make up. And you can see they made some significant changes during COVID where they added a lot more tech, a lot more pharmaceutical companies and such. You can see here broken down into this report. And of course, it's about 4 pages long. I just wanted to kind of give you kind of a quick snapshot of what you can actually get from IMS in terms of getting more information on this particular index. In terms of what happened on Monday, as you can see here on OptiBlend 10, like I said, at a $100,000 band, you can get a 65% par on Fidelity. And then now that uncapped strategy, that uncapped minus the spread is all the way down to a 1% spread. I mean, this is a spread that's very, very competitive in this marketplace. So just wanted to make sure I pointed that out, kind of give you a snapshot of what we have to offer at Lincoln. So obviously you can see here, we have other index strategies available, but in terms of where we tend to see the most traction right now, it's definitely that 1-year S&P 500 daily risk control spread, again, uncapped with spread, and then the 1-year par being the Fidelity dividend participation account. Now, at the same time, it's all about creating transparency for clients and understanding, hey, where does this actually fit in the asset allocation strategy? I always say, listen, when you think about this, it's all about creating awareness. And you think about awareness, you think about dividends, and why do they play such a vital role in a portfolio? Well, if we think about it and we think about time frames that are kind of comparable in some ways to where we are right now, where the interest rates are at a very, very low point and the market volatility was kind of all over the place. Think about the 1930s. The 1930s, the 10-year treasury was below 4%. And as you can see in the 1930s, the equity markets, being the S&P, were negative for that entire decade, but dividends had a 5.4% average return. If I look at something more recent, like the last decade from 2000 to 2010, again, the same scenario. Market was negative for that decade, even though 6 years were up, 4 years were down, but dividends were positive. So when performance wasn't there, dividends were there to kind of help pick up the slack, if you will, in terms of the opportunity. Now, what I would say is you think about it and you think about, a question to be asking clients, or even, let's say, even a room of prospects right now, especially with everything that we went through last year with COVID. Knowing what you know now, if you could build the most ideal investment, what 3 attributes or, let's say, wishes do you wish that investment would have? And typically the big 3 we always hear is, well, I definitely want to protect my money on the downside. If there's one thing last year taught me was volatility can be in full swing at any point. I definitely want to grow my money, have the opportunity to grow my money better than what most safe investments currently can offer. And of course, I want to pay low fees or no fees. So very rarely can we check all 3 boxes and give a client all the various things they're looking for, with the ability to participate in the upside, protect my principal and capture gains along the way, and at the same time be within a carrier that has a strong renewal rate history like Lincoln. So it's definitely another area where we're very, very competitive in the landscape of index annuities right now. So really what I wanted to do here is kind of wrap things up. It's all about, obviously, COVID. We all know COVID changed the world in a lot of different ways. But the one thing that it did not change is the demographics of our customers. And at the end of the day, they still are looking for products like this. They want that protection. They want growth. They want income. They want the ability to pass on money in terms of legacy type strategies to their beneficiaries. 80% of the wealth in this country right now is controlled by people over the age of 50, and that represents almost $20 trillion in assets. And like I said earlier, 42 million people are currently retired. Within 4 years of today, it's going to be closer to 65 million. So again, a lot of money in motion. AARP says 45% of the U.S. population right now is 55 years or older. So the demographics, again, have not changed. The reality is the need's still there. Clients are looking for products like this. In summary, obviously, we talked about why now. We talked about how things work in terms of interest rates and bond values and the kind of the synergy between the two and how they work. We talked about why Lincoln, some of the various index strategies that we have. Because at the end of the day, the reason we're talking about this and the reason why we're having these discussions with clients right now is because bonds typically have always been there as a form of portfolio protection. They're to kind of create high levels of income for clients, capital appreciation even when yields have fallen. But today we all know that the game's changed because interest rates are obviously in a much different place. Bonds are projected to return about 50% less than they have the last 30 to 40 years. Index annuities certainly offer the client the opportunity to get more growth potential, give them principal protection, and at the same time pay no fees with the index annuity. So one of the things I wanted to show you real quickly is just kind of a quick snapshot of what our illustration software looks like, just to kind of give you, if you were going to run a quote with us, how it actually looked. And what I did here is I just did an OptiBlend 10 illustration. I put $100,000 into it. I put 75% in our S&P 500 daily risk control, again, uncapped strategy with a spread, currently at 1%. And I put the remaining 25% in the Fidelity strategy as kind of a value-based index. As you can see here, if we go and look at the last 30 years, it did almost a 5.3% average return over the last 30 years. Now, where it gets really, really interesting is when I go and look at certain different, like I look at a growth market and I look at a down market. When I look at a growth market, this particular index allocation mix did a 7.8% return. And in a down market, like the lost decade from 2000 to 2010, it averaged almost a 3.5% return. So definitely a very good allocation mix. We definitely feel like we're a really good fit for accumulation type business right now. And again, we are very, very committed to our renewal rate strategy at Lincoln. So with that, I'm going to throw it back to Matt and see if there's any questions and close things out.
Appreciate it, Craig. I did have a couple of questions that came up. I know you had mentioned that these slides are available. Are you going to email me the that 13-page slide presentation you use there on the?
I am. I'm going to send you.
Okay.
Yeah, I'm going to send you this, and I'm also going to send you this just so you guys can see it. We do have a white paper from Wade File that we also have that can dive a little bit deeper into the bond fund alternative index annuity discussion point. It's about a 4-page document, but it will get a little more in depth if you're looking for something like that to read it as well. And I'll make sure that I include that in the email to you, Matt.
Appreciate that. And I'll go ahead and forward that to the attendees today. And then, yeah, we look. Another thing came up on the the returns on some of these strategies. I know that we've seen some really good returns on that risk controlled strategy on the S&P. If you actually weighed that more towards that, I think that number would actually go up, wouldn't it? On the returns?
It can look pretty good, but what we found is a good mix, having a little bit of balance value in there with that Fidelity is actually a good thing too, because it does give you a little more diversification by knowing that you're actually got 125 blue chip dividend paying stocks, but just as a percentage of it. And we found that in terms of a trend, we're seeing a kind of that 75-25 mix, and that's certainly been something we've seen as a trend for sure.
Well, good. Yeah, it's good, always good to have a good mix in the numbers, and we've seen some really good results. I know I've seen some returns in the last, couple months on some pretty solid returns for clients, that are in the S&P. So that risk controlled strategy has done quite well, on renewals right now. And I know with Lincoln's, renewal integrity, your clients are going to see continuous higher renewal rates with Lincoln and not run into a situation where they have a big drop in renewal rates, based on, each company's different, but I know Lincoln's been very good with their renewals. So glad to see that. Any big news coming up on Lincoln's side there, Craig, we can look forward to the next few months?
I think at the end of the day, I think it's all about, obviously, we're definitely coming back in a big way now that interest rates are starting to come back. We are very much committed to being a thought leader. So presentations like this and more consumer facing content we are creating behind the scenes. We have a lot more stuff that we're going to be building for this year to give you guys. So that way you can network and communicate and educate your clients throughout the year, whether it's going to be in person or virtually. So we are definitely creating more and more stuff like this because we know the feedback we've gotten from advisors was, I love your stuff, but I want to see more consumer-facing content that I can use to really educate my clients on various topics. So we have a lot more stuff in the works, so more to come.
Good. I had a call out from New Jersey. Yes, the plan is available in New Jersey. So when I give you a call, Bart, I'll be sure to get you some information over on that. And then another question came up on income riders. I know that you guys suspended your income riders with the low interest rate environment. Are we looking at those coming back on board anytime soon, Craig?
They'll definitely come back because we were definitely always more of an accumulation focused carrier. We certainly did our fair share of income riders. I think we just need interest rates to come back a little bit more than they are. I think it's going to have to be definitely above 1.5, if not more, before we're going to start bringing back income riders. They're very expensive to price out in this environment with interest rates being so low. But we definitely have every intention of bringing them back. We just need rates to come back a little bit higher.
Sure. Well, I'm sure we'll have some more good news from Lincoln coming up in the next 60 to 90 days, and hopefully we'll see some of the interest rates climbing a little bit, based on what's happening in the market. So we'll see how that all plays out the next quarter. So we'll see how things trickle down to the interest rate environment and annuities with participation rates and caps and all the other things feeding returns back to the clients. So we'll keep everybody posted on that end. Appreciate your time this morning, Craig. It's always good to have you on board for a good Lincoln presentation. I know we've seen a lot of changes this first 60 days of the new president, and I think we're going to see more changes come down the road, with some of the DOL legislation and some other financial situations be coming up, I'm sure, in the near future with some different aspects from the new people in the White House. So we'll see how that plays out. But otherwise, we'll keep everybody up to date. I know that we had a lot of interest in yesterday's presentation, and today's presentation was very well attended. So we appreciate everybody attending today and yesterday. And if you have any questions, give me a call. This is Matt. I'd be glad to get any information out. When I get the presentation from Craig, I'll go ahead and get that sent back out to you out in the field. So you'll have that along with that white paper. So everything will be good to go. Otherwise, everyone stay warm out there. I know we've had a pretty miserable week here in Omaha. We had a whopping high the other day of -5. So that's a great way to enjoy the day. And if you have anything you need, the rest of the week we'll be open. So give us a call. Otherwise, everyone, look forward to spring, and we'll talk to everyone soon. Thanks again, Craig, and have yourself a great week.
Thank you.
Bye now.